Thanks, Andrew, and good morning, everybody. Firstly, before we get started, I just want to point out that you should all have one of these in your packs. These booklets detail all of the budget announcements and the rates and tables for the coming year. So don't bother trying to furiously scribble everything down that we say this morning. I'm going to be focusing, as Andrew said, on some of the budget announcements that we found particularly interesting back in the office. So, arguably, one of the biggest announcements in the budget relates to how the tax system is administered. As the papers build it, the death of the tax return. As part of the government's vision to modernise the tax system, by the end of the next Parliament, tax returns will be replaced by digital tax accounts for both individuals and businesses. These digital accounts, as Andrew said, will be pre-populated with the information HMRC already holds about us. To quote David Gauke, the Financial Secretary to the Treasury, the new online accounts will bring together each taxpayer's details in one place, just like an online bank account, so they can register for new services, update their information, and understand quickly and easily what they need to pay, without ever having to complete a tax return again. But is this really the case? What about those without access to the internet? As Andrew said, taxpayers will still need to speak to HMRC, as will need to verify that the information they have is correct, as well as declaring any information that HMRC doesn't already have, for example, self-employed income or capital gains. The idea for businesses is that they will link their accounting software, so things like Sage, to their digital tax account, so that data is fed directly to HMRC. According to the government, this will mean that most businesses will simply log in to check their details with no need to send an annual tax return, so your corporation tax returns and you like. In practice, we think this could work by extending the current IXBRL regime that limited companies have been using for the last couple of years. And it's also going to be interesting to see whether HMRC will actually go a step further and have real-time, live access to businesses' financial information. Do we think businesses will want this? We'll see. The proposals in the budget also suggest that individuals and businesses will have the option to pay as you go, rather than paying a one-off tax bill many months down the line. Instead of making a number of payments across several different taxes, they can make just one payment as if they were paying a single tax. So I wonder whether that will enable HMRC to sneakily increase the rates. We'll have to wait and see. We'll also have to wait and see, as Andrew alluded to, whether HMRC's systems can communicate with the more simple software packages that a lot of our clients use, and whether investment in super fast broadband will keep up with the scale and pace of HMRC's ambitions, particularly in rural areas. So, personal allowance. It had already been announced that it was rising to 10,600 from April this year, so from a couple of weeks' time, with the basic rate increasing to 31,785. The government expect that this is going to take 3 million individuals out of income tax altogether. Since 2010, the government have raised the personal allowance by just over £4,500, and they think this has benefited 27 million people. Last week, the budget announced further increases to the personal allowance to 10,800 in 16-17 and 11,000 in 17-18, with the basic rate increased 31.9 and 32.3 respectively. Now, seeing as the majority of you voted to raise the high rate threshold to 50,000 in our survey, no doubt you'll be pleased to hear that the amounts at which you'll be paying high rate tax will be increasing to 42.7 and 43.3, so well on the way towards 50. I've also put on in grey there the inflationary adjusted rates based on this year's allowance. So you can see it's pretty similar to inflation. The higher personal allowance before those born before 1938 will be removed from next year, from 16-17, so that everybody, regardless of their age, will have the same personal allowance. And these measures are a stepping stone to the government's longer-term commitment to raising the personal allowance to 12.5 and the high rate threshold to 50 by 2020. And that's obviously the Conservatives' policy. Mike's going to be talking to you a little bit later on about some of the wider economic implications of these rates and the allowances at this level. So, whilst we're on the subject of personal allowances, from April this year, so from a couple of weeks' time, married couples will be able to share part of their personal allowance. This will be relevant, for example, where the couple is made up of one non-taxpayer and one basic rate taxpayer, and it could save them up to £212 in tax. The government expect this will affect more than 4 million married couples and 15,000 civil partnerships. What's important, though, is that the taxpayers need to claim to be able to benefit from this relief. We found from our own client base that often we don't have details of the spouse's circumstances. So if somebody else is doing your tax return for you, you need to make sure that you let them know so that this isn't overlooked. One announcement that wasn't expected was the introduction of an allowance from April next year to remove tax on up to £1,000 of savings income for basic rate taxpayers and £500 for higher rate taxpayers. Unfortunately, additional rate taxpayers, so those earning over £150,000 a year, won't benefit from this. Now, I'm sure you're all aware that at the moment the banks deduct 20% tax at source before they pay you your interest. Going forward, this will no longer be the case. Instead of the banks deducting the interest, HMRC are going to adjust your pay-as-you-earn codes for any interest that remains taxable. Now, I'm sure Andrew will verify this. Our tax department spend a lot of time checking HMRC pay-as-you-earn codes because invariably HMRC do get them wrong. So, needless to say, we're a little sceptical as to whether HMRC are going to successfully be able to collect the right amount of tax going forward. As part of the planned reforms to tax administration, the government also announced that they will abolish Class 2 national insurance contributions in the next Parliament. For those of you that don't know, you usually pay two types of national insurance if you're self-employed. Class 2, £2.80 a week there, and Class 4, which is based on a percentage of your profit. So you'll see it kicks in at just about 8,000 there. The government are going to consult on the detail of this later this year, but I must admit I was a little surprised to hear this, given that we've only just had legislation passed to enable Class 2 to be collected via the self-assessment system. Going forward, it's going to be vital to make sure that people don't miss out on benefits to which they've previously made contributions towards. As the Low Income Tax Reforms Group have pointed out, it's currently not possible to pay Class 4 national insurance if your profit is below about 8,000. However, at the moment, the self-employed can still pay Class 2. So does this mean that under these new proposals, the self-employed with low profits aren't going to be paying any national insurance? Are they not going to be receiving any state benefits? Mike's frowning at the back, saying, well, what about Class 3, voluntary? You were thinking that, Mike, weren't you? Yes, they could voluntarily pay Class 3, but this will cost them about £570 per year more than Class 2, so it's a lot more expensive. So we'll be keeping a close eye out for the consultation later this year. Company cars. Now, the table I was sitting on over breakfast, we're talking about company cars, so this is quite a relevant point, I think, for a lot of people in the room. The announcement by the government to continue to support low-emission vehicles is a welcome one. The benefit-in-kind percentages have done much to encourage manufacturer innovation and uptake of low-emission vehicles into company car fleets. However, it is still the case, and I've put the table on the screen there so you can see, that the benefit percentages is rising sharply over the next 3 to 4 years. At the moment, we tend to find that most cars fall into these two bands. So you can see there that the percentages really do start to ramp up towards 18, 19. So at this point, I thought I'd share with you something that we found particularly interesting back at the office. There's two cars on screen there. Hopefully everyone can see them. The white one is a Porsche, and the black one is a BMW. None of the Howard Worth staff can answer this, but can anybody tell me which is the most expensive list price? Thanks. The Porsche, correct. £85,000. The Porsche is the most expensive. Okay, what about company car tax then? Again, none of the Howard Worth guys. Anybody like to hazard a guess which is the most expensive company car tax? Correct. Surprising. Now this highlights an interesting point. The Porsche is in fact a hybrid, which puts it into this band here, 51 to 75. Now, given the speed of innovation in the automotive industry at the moment, are these three bands, as wide as they are, going to be appropriate in 4 years' time? We'll have to wait and see. Moving on to capital gains tax, the government announced that they will prevent individuals from claiming entrepreneurs' relief on the disposal of personal assets used in a business carried on by a company or a partnership unless they dispose of, in connection with the disposal, at least 5% of their shares or 5% of their interest in the partnership assets if it's a partnership. And this will affect disposals on or after budget day, 18th of March. So that's a slight tweak to the entrepreneurs' relief. As announced in the autumn statement back in December, legislation has also been introduced to prevent entrepreneurs' relief being claimed on gains made on goodwill on incorporation. Now, it was pretty common practice that when first starting out in business, clients would often operate as sole traders and partnerships. When they reached a certain level of profitability, they would then look at incorporating into limited companies. More often than not, incorporation allowed clients to recognise the market value of their business, which resulted in a capital gain. So consider this example. We've got a sole trader there whose balance sheet is made up of some plant and equipment, some stock, cash, debtors, some creditors. So on paper, this puts the value of the business at 50,000. Now, in reality, if the sole trader was to sell his business to a third party, the third party might pay 100,000, basically because of the lucrative contracts that he holds, that the sole trader holds. Customer list, effectively. This implies then that the difference of 50,000 is the goodwill value. So what was happening was on incorporation into a limited company, the 50,000 goodwill would be a capital gain, would qualify for entrepreneurs' relief, would be taxed at 10%. This means that the client then has £45,000 to draw out, and with no more tax. So that's pretty simple numbers there, but if you scale these numbers up, you can see that quite often clients could draw out a huge amount of money for a 10% tax rate. Unfortunately, the government have put a stop to this. They didn't like it. So from the 3rd of December, that's the date of the autumn statement, 3rd of December last year, we can't do this anymore. And the main reason for stopping it was the difficulty that HMRC had in confirming the valuation of the goodwill in these businesses. Going forward, clients can still recognise goodwill on incorporation, but they'll have to pay tax at 28 rather than 10. So it's no longer as attractive. Okay, farmers. The government announced an extension to the period over which self-employed farmers can average their profits from 2 years to 5 years. The government are going to consult on this later in the year to determine the detailed design and implementation process. And this measure, they say, will come into effect from April next year, April 16. The new measure follows lobbying from the National Farmers Union, who said after Mr Osborne's announcement that the policy will go some way to allowing farmers and growers to manage market volatility and focus more on investment and growth. I had a conversation with Suzanne Preston, our farming partner, about this on Friday. And we both think that it will be interesting to see how HMRC will deal with the averaging over such a long period. No doubt adding more complexity and more administration to the process. And Suzanne told me that she tends to find averaging benefits farmers most when their profits fluctuate between the 40% band and the 20% band, or between when they make a profit and a loss. Generally speaking, average annual farming profits tend to remain within the same tax band. And as a consequence, averaging isn't always effective. So it's therefore going to be difficult to see how the government think that it's going to benefit 29,000 farmers, saving them approximately £950 on average. So we'll have to wait and see on that one. Moving on to research and development. From April, the above-the-line credit is increasing to 11%, and the R&D enhancement for SMEs is increasing to 230%. The Chancellor announced that a future finance bill will also improve access to the R&D relief scheme for first-time claims by small companies. And the way they're going to do this, they're going to introduce an advance assurance system, which will be effective from later this year. We think the increased certainty that this will provide will be beneficial to smaller companies investing in R&D. Small companies, we find, often misunderstand the R&D regime, so improved guidance will be very well received, whilst a publicity campaign will help these companies identify the relief available. A survey of SMEs in the UK by KPMG earlier this year found that only 5% had taken advantage of R&D credits. In the last 2 years, we've helped our clients secure between £200,000 and £300,000 per year, and that's on a very small proportion of our clients. So we would probably agree with KPMG's findings. Thankfully, to increase the take-up of this relief, the government used the budget to pledge to increase and raise awareness of this over the next 2 years. So, I'd like to finish my section of the presentation this morning on the so-called Northern Powerhouse. No, I'm not sure this is what George Osborne had in mind during his speech last week. Personally, I think he probably meant this. To be serious though, it was good to hear that the government didn't forget about us Northerners. We can look forward to rail and road improvements across the region, things like the M62, the A556, HS3 on the horizon. A report published earlier this year revealed that 170,000 people now work in digital businesses in the north. To accelerate growth in this area, the government are investing £4 million in a tech incubator in Manchester, and they're extending the enterprise zones in the region. The government are also looking at further devolution of powers, and Cheshire East Council have been asked to participate in a pilot scheme where they can retain up to 100% of business rate growth. Hopefully, these additional measures will lead to further economic prosperity in our region. And with that, I'll hand you over to Mr. Glaister, who's going to talk to you about the current economic climate and give you an overview of some of the pension announcements.